Welcome to the Hurley Investments Financial Services Commentary for the 24th of October. We will not have it next week. I will pre-record something for you again. Go to myhurleyinvestments.com. Actually, it's My Hurley Investment. If you head there, I think I can have it. If you head to myhurleyinvestment.com. It's my blog page, and I will put something up. But being the 31st or Halloween, I have parental duties to take kids to go out and basically go trick-or-treating. So none next week, but we will be up and running the week after. With that said, let's start off. I want to start off a little bit and talk a minute about trading. Give me your thoughts. Give me your thoughts on trading. If I was to mention the word trading, I would like you to give me your thoughts. Give it to Lance. Rolling the dice. Lance, why would you consider it rolling the dice? Why would you consider trading rolling the dice? Any other comments from anyone? Why would you guys consider it rolling the die? Actually, here are some other comments come in. Let me get this expanded so we can, come on, expand it out. Alrighty. Give me a quick second here. I need to get there we go. All right, so the comment was rolling the dice, and I asked why, and you are correct. Trading is different than investing, and it can be rolling the dice if you are looking for some quick money. It obviously is different than investing, and Lance, a good way to put it. A very good comment. I like this. Trading should be set up, and I'm going to put a little something different in here. Set up and I'm just going to put and run, if it's okay for me to change that, Abraham, and run as one would do a business. And I definitely think that's a good comment. Safe investments through hedged investments. Richard, give me some more information on that. Safe investments through hedged investments is what you consider trading. I want you, if you don't mind, expound on that just a little bit. Blind leading the blind. So let me go ahead and make this comment. Leading the blind, especially when it comes to advisory services. Yes, through advisory services, sometimes it's the blind leading the blind. Most advisory services in education are not allowed to be done with real money per se unless you're licensed. And what I mean by that is you can open up an account and show a personal account, but most people cannot afford to do every single trade in advisory, which case advisory services are done in a virtual account, which loses the emotional side of trading. And emotional trade, well, emotions, obviously fear and greed are the big winners or losers on how you're able to control that through trading. I feel so sorry for Jeffrey for some people that join, and maybe the first 2 or 3 trades don't go the way that they had planned, and they quit the education. Too short-sighted. Those people, with all due respect, will never be successful in the stock market, ever, because you need to be able to in all honesty, take some losses. You need to be able to have emotions and control those emotions, not by following someone else, but by learning how to trade, make adjustments. I'm the first one to tell you, I am an emotional person. Through years of sports, if you show me a good loser, I'm going to show you a loser. I'm going to show you someone that doesn't want it enough. And I'm not saying that you should have poor sportsmanship, but it literally pisses me off to lose in a spread trade. My spread trades or my trading is very, very limited. I'm a caller trader. I'm an investor. I'm in it for the long run. And because of being in it for the long run, I don't look at these short 2 to 3 week trades. It drives me crazy. So I appreciate the blind leading the blind, because yes, it can be that way for a lot of people. You can bet as you wish, but always manage risk. So if I'm going to go ahead and say that, with trading, be okay with the worst possible outcome, or don't place the trade. Of course, I can't lose what I have, so I need to do investments with limited risk. Great comment. You know what? The neat thing is spread trading limits risk as well as presents an opportunity for adjustments. And again, adjustments is a two-edged sword. It is one that allows you to it allows you to change your maximum loss and minimize it. There's different criteria from the one an investor trader needs to have an advisor. Most can be used in some reference. Advisory has different criteria from the one an investor trader needs to have. Advisory at most can be used as some reference. Agreed. It's some different thing. So the reason I'm bringing this up is because, in all honesty, I entered Costco 160 June 2018, long calls again. And if I was to bring up a Costco chart, someone tell me, what did I see on Costco that had me challenge myself to the why did I go into Costco trade looking at that chart? Where's my trigger at? Where's my trigger on my Costco trade? 150, 155. Actually, believe it or not, my trigger was 152. I was going to add a contract. 151, I was going to add a contract. 150, I was going to add a contract. And if it broke 149, actually right here, 149.52, I was screwed. Great way to put trading in technical terms, huh? I was going to start adding puts. But that's how, for everyday people, I was going to put at least 3 contracts in, maybe 6. But you know what? Stop down at 154. Bounce itself right back up after good earnings. So what was my trigger? Since I obviously missed the lows. We have higher lows, if you notice, 49, 50, 54, higher lows. What was my trigger? Good guess, George. The gap down. Well, that was an earnings gap on great earnings. They were obliterated for no reason. Completely don't understand that. But what was my trigger to get back into Costco at 160s now instead of 150s? I was going to use the 50-day simple moving average, but it doesn't make sense. The 50-day simple average didn't make sense because we were so close to the 200 where big money makes their decisions. We have a death cross, 8% to the downside. Haven't hit that 8% to the downside yet, in all honesty. We dropped $10, which was about 6.66, but that 8% never showed up. So in all honesty, I went out on a flyer. I went out on a Christmas rally on expectation, but we finished above the 200-day simple moving average. So yesterday at the close when we were right on it, I said, you know what? I'm going to play a bounce. We have technical crossovers. We're close. If I was to bring this out on a 5 and 20, we're also close. So yes, I am trying to outguess the market. I'm trying to outguess and play a level of support on Costco. Envelopes. If you'll see, I don't have my crossovers on my 5 and my 20, although they just crossed over today. So I've got 2 out of 3. But believe it or not, I was playing a Christmas rally. I was playing the expectation that it'll go higher and at least test 167. Expectation is 170. I might get out on some of my contracts at 170 again. But again, I was playing the 200-day simple moving average. Now, occasionally I get someone that says, well, you should have the 100-day. With all due respect, no one pays any attention to a 100-day simple moving average. You have yet to find any institutions that I talk to or work with that uses a 100-day simple moving average. It's not used by professionals. It's don't even pay attention to it. It's not important for you. It's not going to be helpful. I also did, though, believe it or not, look at Bollinger Bands for a possible run up because it looked like it seems to touch those Bollinger Bands. So I felt comfortable it might get up to 168 to the upside. It also justified to a certain degree where I've got my support down at 153. So if we do head back down at 153.71, 154, I'm looking to add contracts to dollar cost average. And again, one last indicator that I used, which I don't know, it's not, I use it when I'm uncertain, when I don't have all my crossovers, or some of my crossovers are laying on top of each other. Back in the day, I grew up using the Williams %R. It is a medium stochastics. It was out and more commonly used before stochastics were used. And my Williams %R just gave me a break above the median line. So that was my decision on my trade, a directional long call on Apple. Purely technical in nature, using a possible Christmas rally. And in all honesty, it's pure greed. I'm doing nothing more than trying to make some quick money on an oversold condition with a great earnings on a great company. I'm not worried in the least little bit with Amazon buying Whole Foods. That is unimportant. It does not have any bearing on where I'm at. And the neat thing is, the difference between investing and trading, if I can go ahead and make one more comment. Investing takes patience to allow a stock to run. I'm going to pick on George Curtis a little bit and Keeve a little bit. If you guys don't mind making a couple quick comments here, and I've actually got Babu, so I've got a couple people here that are happy with what I've been doing. And I got one person that go, Kevin, I'm still waiting around for you to do something. But if you ask George how he's enjoyed this year for investing, George, how am I doing for you? And how am I doing, if I can use Lance too, how am I doing for you too? Keith, you can answer that if you want to. I'll be the first one to tell you. Dr. Gupta's come in, and I've kind of been setting things up for him, so we're waiting for some things to move. But what do you guys think? All right, and yes, Lance, I will use the disclaimer. Lance says I'm doing good at a 28%, and you seem to have taken no more than 10% risk in my portfolio. I enjoy what you've been able to do for me by adding shares, and I appreciate the fact that you've put my money, that doesn't make sense, put my money to patience and at ease. Can I ask you where we're at for year to date for a return? Year to date for a return, we're looking at about a 26% for a portfolio this year that started with $750,000. So, what is the difference? What happened? Okay, so Lance just said some of your stocks finally started to move. Baidu moved. In fact, Visa moved. We had a good move on Apple this year. last year, my upper people, my upper group was my worst. My little accounts, $250,000 or less, were the ones that moved. My 250 to that 700 range kind of meandered. Some for the whole year were good, some were break even, and then my 700 and higher last year, I only pulled out at 2.6%. Everything's flipped this year. The small accounts are just kind of meandering, breaking even, up maybe 4.5% on NVIDIA. The median accounts are doing pretty good, matching the averages. My big accounts are knocking it out of the park. It's a matter of patience, and it's caller trades. George just said, starting to see some good results, caller trades. Guys, we are going to have a significant drop. I don't know when. I can't predict when. I wouldn't try to guess when. But the fundamentals of the market are upside down. So, when you see that, at some point in time, be prepared for a significant drop. When I asked what's happening this week and why, so far nothing. It's an earnings week with little economic reports. And this will be the start for a 4-week run. We'll go through a 4-week run where we're going to get lambasted by earnings. Earnings after the bell stunk. So I would expect we're going to have the Dodgers probably win the World Series over the Houston Astros. Kind of a bad thing in my family because Alan Ashby, my uncle that I married into the Ashby family, is a great Houston Astros catcher, and the futures actually aren't that bad. The Dow right now is only down 10, the S&P down 3, the NASDAQ down 4.5, but it seemed like not very many of the after hours earnings hit it. In fact, it was actually pretty bad. After hour earnings by a lot of big companies, Chipotle, what else happened after hours? There were 4 or 5 that just stunk it up. So this week is the start of 4 weeks where we're going to get earnings, where if there aren't any economic reports, you're going to see the market move based on earnings. Where our markets end this week, I can't remember a time when I have seen an index overbought for a month. It is my belief that we are going to be overbought for the whole month of October, which again is probably something that we've never seen. It'll be another record for our stock market. Basically overbought on the S&P as well. So all I'm doing is I'm looking at where our markets are going to end this week. I'm going to say higher. But it's really going to depend, for the most part, on Thursday's earnings. If we take a look at Thursday's earnings, which will move our market, Google, can't spell worth beans, Google and Amazon. Google and Amazon are going to run Thursday. For personal accounts, we're going to be looking at Visa will be tomorrow. I've got some people that are just starting. We're dabbling in Freeport McMoran. Those are the big earnings on Wednesday for Hurley Investments. Thursday, Baidu, Ford, Southwest, and what the heck is MO? Altria? I forgot what MO is. It's one of the new ones that I'm picking up that has its earnings. There it is. It's Altria Group. And so it's now time, when you're looking at some of what's happening, you do want to spend some time updating and taking a look at your earnings list. So if I was to look at my earnings list, Alcoa was last week. So I'll go ahead and I'll take that one off. American Eagle Outfitters brand, estimated when it's going to come up, but it looks like it is now. And all I do is do my Sunday research after the market close. Bank of America has happened, pretty good. Baidu, that has its earnings coming up this week, and I'm pretty sure it's after the market close. It usually is at 8 o'clock. Citigroup is done. Clorox, Costco is done. DHI, DH Horton. What an amazing run that one's been on. Disney's on the 9th. Ford, Facebook, FCX, Love, Altria, Micron. Got some clients. Got some. Oh, what am I trying to say? I've got some people who have been watching that one, and Zions Bank was the 23rd, which was on Monday, but maybe I'm wrong on that one. I don't know when Zions Bank has its earnings. So I update my list. I do the best I can to update my list to make sure that if stocks are running, I might protect them a couple days before with a long put, and the day of, I might throw on a short call. I'll be honest with you. I'm trying to let things run. I'm trying to let things run. Run by following the current buy the dips trend we are in. I'm shocked. I'm absolutely shocked on how the dips are bought up. The other day when we were down 100 points and we came back, shocking. Doesn't make a whole lot of sense. Doesn't make a whole lot of sense at all. Tomorrow, durable goods should also start our futures with new home sales. Futures should be down because we had some pretty bad earnings tonight, but maybe the before the market earnings tomorrow will start to move our markets. A lot of earnings coming up tomorrow. I don't want to call them bellwethers, but they have been known to move the market. Boeing, Coke, Dr. Pepper, Sprint's not a mover, but Visa before the market opens, FCX could definitely move our market or set our futures for tomorrow, dealing with the losses that are occurring today. I found a couple interesting articles. One on 8 tax changes for 18. Just some things to help you know. I just found it interesting because I'm in the industry. And then I've always told you guys my worry is if we lose our reserve currency status. If we lose that, I am really worried about where we're going to end up. And in all honesty, the start of losing our reserve currency status is hitting ourselves right now. So feel free to read through this little article. I liked where the numbers were coming from, and I totally agree with the worry or the concern that we're talking about in regards to China and how the world is attempting to do the best they can to take down our reserve currency status. That's what it comes down to. What will the United States do if we don't have that 6 to 16% advantage in currency trading with commodities? Abraham just made the comment, the dollar will stay where it is, reliability is in essence, and China is not. That's true. But China is now looking to trade oil amongst itself, its Asian countries, its trading partners, and Russia with the yuan or the yen. The yuan, there it is, and they're going to impose it upon all of their oil companies, which is about $1 trillion movement in oil. Not it would be a big chunk, is what I'm trying to tell you. And, you know, we've had a competitive advantage economically where we don't have to exchange currency rates. We can go through 4 changes in currencies to get to dollars to buy commodities and then bring them back and sell them amongst your own country. It's a scary thought. But questions, what questions do you guys have that I can answer for you? What questions do you guys have that I can answer for you? If there are not any, I'm going to run and go watch a Pinewood Derby scouting event. But best bets for year end, boy, I think we still run higher, Abraham. In fact, I think we could even run through the first quarter next year, which would be unheard of, on tax reform. So I am protecting some positions. I'll be honest, I am running Freeport McMoran with no protective puts, just stock ownership. I am running Visa with a 9% in the money covered call. I am not using some puts on a Visa or a Freeport McMoran earnings that are both tomorrow before the market opens. But bets for year end, boy, when we saw the other day when the market was down 100 points and it came back to just be slightly positive, the buy the dippers are in. I think we're going to keep running this ridiculous run on the Dow. 200 points today, ridiculous. If anything, I'm telling you, the Dow this year has turned itself into a non-important index to follow. So I'm going to tell you, let's see us run until mid-December. Then you'll see people most likely starting to take some profits. A small pullback, 3% maybe, at literally the end of the year, the middle of December till the end of December. Any other questions? All right, so Lance made the comment. What do you do when years don't end up the way you want them to be? So, Lance, I'm assuming you're talking about last year, because last year we kind of muddled along. Lance, the best answer for you is I stay the course. I'm not going to change what I do. So, with all due respect, there is someone else here that I'm sure was frustrated with me last year. Sometimes the positions take more than a year to become profitable. But as we went through last year, and I'm sure I told you last year, Lance, hey, you know, we added 300 shares of Baidu, we added a couple hundred shares of Disney, a couple hundred shares of Visa, a couple hundred shares of Apple. Yes, you know, I did not beat the S&P 500 for you last year, but I added 900 shares of stock without once asking you to put more money in your account. And those 900 shares were worth far more than the market gain. And those shares, obviously, this year on something like Baidu, on something like Visa, make me look like a genius. And as you have seen your account, really like where your account's at. So that's the point of what we do for collar trading. Any other questions? Alrighty, guys, I appreciate you being here. If another question comes up here, I'll answer it for you. Thanks for saying thanks, Abraham, and also Lance. Of course, your questions aren't too personal. If you're okay with me talking about your personal account in this way, I will. And you know, again, I appreciate you being willing to ask those questions. So your questions are fine. All right, guys. Hey, have a great night. Appreciate you being here. I will not see you again next week, but I will have something pre-recorded for you, and I'll do the best I can to get it up on Tuesday. Again, go to myhurleyinvestment.com, and you will see the October 31st notes, and I'll have something recorded and ready to go for you. Guys, have a wonderful evening. I'm going to go run to a Pinewood Derby car for one of my boys for Cub Scouts. Have a great evening. Talk to you soon. Bye-bye.